all of a sudden the sales teams are calling up all of these asset managers and saying, hey, we can quantifiably prove that you're going to increase the Sharpe of your portfolios with a 1 to 5% Bitcoin allocation. They're going to do it. It might not be immediately, it might not be within 6 months, but give it a year or two, they're all going to come on board.
In this video, I sit down with none other than the Caleb Franzen to talk about macroeconomics, the difference between disinflation and deflation, and we also talk about a whole lot of other stuff, the S&P 500, DCAing Bitcoin, and some winning strategies going into 2024. We had a lot of fun in this conversation, and if you enjoy it, please subscribe to the channel. If you got any value out of it, please like the video and let me know in the comments what asset you think is going to perform the best in Q4 2023. It could be on the crypto or the equity side. Let me know in the comments. Enjoy the video. Caleb, it's great to have you on. Disinflation and deflation. There's a big difference between them, but most people don't know about it. Tell us a little bit about your thoughts on the difference between deflation and disinflation.
I think that, probably the easiest way to explain this is just through an analogy of driving, because everyone's familiar with driving on the freeway. And so my analogy for the difference between, inflation, disinflation, deflation. Disinflation is when you're going 85 miles an hour on the freeway and you see a police officer up ahead and you slow down to 65. It's a deceleration, but your forward velocity is still forward. The car is accelerating forward. Or I should say it this way. The car is moving forward, but you're now decelerating from 85 to 65. So inflation is just a positive rate of change, a positive speed, a positive velocity. And then deflation is a negative. So it's basically, it's not a perfect analogy, but putting your car in reverse and going backwards, right? And so we can transfer that to prices now. Inflation is when prices are rising. Deflation is when prices are falling. Disinflation is when the rate of inflation is coming down. So prices are still rising, but they're rising at a slower pace, right? So disinflation is falling from a 5% year over year inflation reading down to 2.5% or 1.5% or something lower.
Yeah, exactly. So the goods and services are still getting more expensive, all across the world as these inflation rates, they do disinflate, right? So the inflation rates of acceleration are coming down, right? But the bananas slightly more cheaper month after month, right? The new tires slightly more cheaper month after month. And until those prices start to level off completely or come back down, you actually still have inflation. So, we're going to continue to watch those new data prints that come out, sometimes weekly, depending on what the Bureau of Labor Statistics wants to do that month. But we're going to track that. And we're going to continue to bring it to you all. So, Caleb, you come to this space, the intersection of traditional finance, a lot of expertise there, but also you have grown quite a bit in your knowledge of crypto. And I would say you're probably one of the bigger authorities now, on crypto in a lot of ways. So I wanted to get your take on this new phenomenon that's been going on, which is the decoupling of Bitcoin to the NASDAQ, the QQQ specifically. So this has been happening. It's getting a decent amount of folks excited because of what it could mean for the price of Bitcoin in the future. Could you just speak to that and speak where do you think that is going to put Bitcoin and even the equity markets into Q1 of next year and beyond?
Yes, we've seen equities really weaken a lot over the course of the past 3.5 months. And, kind of going into that high print that we had for the year-to-date highs in equities in July, it was kind of interesting because that market was still rallying while yields were also pushing higher. Yeah. And so there have been a betrayal of a lot of correlations that have been happening this year. And one of the reasons why I chalked that up is because the expectation of future cash flows for future earnings were rising. And so these companies' equity valuations were expanding in that environment, even though yields were pushing higher. And now what we've seen is that equities have really cooled down, right? The S&P on Friday officially entered correction territory, down 10% from the year-to-date high close. So, that's pretty significant. Meanwhile, Bitcoin is up, I think, 17% since mid-July. So we've seen equities really cool down in an environment where Bitcoin, not crypto, but Bitcoin specifically has remained extremely strong. And that's just quite simply because Bitcoin is experiencing its own individual catalysts and tailwinds in this environment. We're 180 days, give or take, away from the halving event. We have, spot ETFs, plural, that are going to be approved at some point. And at this point, it's a matter of when, not if, and it's going to be sooner rather than later. And so the market continues to price that in. And again, that's not a catalyst that's even impacting the rest of crypto. It's certainly not impacting equity markets. And this is a Bitcoin specific catalyst. And so even on Thursday night, I ran the 90-day or the 3-month correlation between Bitcoin and the NASDAQ 100, and it was negative 0.23, so a negative 23% correlation, which is not super significant, but still noteworthy. And so, yeah, I mean, basically just perfectly summarized, right? Because over the last 3 months, as I've said, we've seen equities really cool off. Bitcoin has continued to chug and chug higher and higher. And so that negative 0.23% correlation is really telling the full story.
Mm-hmm. Now, I appreciate that. And you clearly have done a ton of actual deep dive on this to be able to produce, that kind of a take. The question I have is how much of that selling out of equities, how much of that liquidity is directly rotating into Bitcoin specifically? Do you think that there's a compelling evidence for that, or do you think that it's unknowable?
It probably leaned towards being unknowable, but I would say that, it probably leans towards being unknowable, but I would say it's a pretty slim probability that we're seeing liquidity actually transfer out of the equity markets and into Bitcoin. Because it doesn't seem to be the case that risk appetite, more broadly speaking, is very high. We're seeing consumer staple stocks outperform in the equity markets. We're seeing healthcare stocks outperform in the equity markets. We're seeing utility stocks outperform in the equity markets. That's generally a sign of a very defensive market environment.
Right.
Look at gold accelerating higher and higher. That's, again, a sign of a defensive market. Surprisingly, we're not seeing U.S. Treasuries participate in that upside. And so it'd be a little bit of a stretch for me to say investors are dumping a risk asset like the NASDAQ 100 and equities and tech stocks and growth stocks. And now they're going even further out onto the risk spectrum and putting capital into Bitcoin. So I'll leave my comments there.
Yeah. So I would push back a little bit on that. And I think before 3 weeks ago, I think that what you just said would be that argument would be intact. But I think the big moment was that when Larry Fink specifically came out and said Bitcoin is a flight to quality, right? I think that specific statement really probably changed quite a bit of hearts and minds on Wall Street, and then folks with their own 401ks and just wealth managers across the board. I myself have had a lot of, those uncles, the proverbial, un-orange pilled uncles kind of coming out of the woodwork, hitting me up. Hey, is this, what's this whole Bitcoin thing about? I know that you're into that. So I do think that, it's kind of, Bitcoin is further out on the risk curve. If you there's just no way around that. But I do think that as we kind of move forward and we have more of the Larry Finks, of the world coming out and saying things similar to flight to quality, that narrative might start to change. And at the end of the day, Bitcoin has been kind of branded as this digital gold in a sense. So I think that we may be starting to see a little bit of a depegging too of it even being considered a risk asset. So it's one way to think about it, but I do tend to agree with you. The other thing too is it's clearly some percentage of the selling in equities is rotating into Bitcoin, but it's by no means all of that money moving into Bitcoin. Bitcoin would be well into the hundreds of thousands per coin if that was the case. But yeah. So speaking of equities, we'll swerve back into Bitcoin here in just a second. But speaking of equities, do you see the S&P getting down to 4,000?
Well, what I'm looking for in the S&P is a return to the 200-week moving average. And for me, that's the real kind of level I'm watching. Okay. And so for me, that is right around 3,900.
Okay.
So we could get down there. And that's the exact level, by the way, that we rebounded on in October of last year when the S&P retested that 200-week moving average in October of 2022. That was the bottom. And historically, it's a great time for long-term investors to be increasing their equity exposure. And so in the call that I had with Cubic Analytics members on Thursday evening, I mentioned that as kind of a call out and say, hey, look, it's not out of the realm of possibility. We get back to that level. If and when we do, be prepared to be a buyer for core portfolio holdings. So that's kind of my mindset right now. So yeah, it's possible we get below that 4,000.
Mm-hmm. Absolutely.
Yep.
Yeah, and that's what I'm tracking as well. I think equities have some more downside here, but I'm nibbling, right? I'm nibbling on equities here because I think that there's going to be much more upside when the Fed does go ahead and flip to cutting those interest rates. But we will not get into the interest rates too much, as tempting as it may be, because I want to swerve back to Bitcoin. And I want to ask this question. It may not be a group of people. It may actually be a portion of existing buyers' portfolios. But Bitcoin buyers, where are they? Who are the ones that aren't in right now? Why is that money on the sidelines? Who are the buyers that are not in Bitcoin now, and what are they waiting on?
I think of like wealth management clients, and so those are going to be individuals, but under the umbrella of institutional money, because at the end of the day, it's Merrill Lynch who's allocating capital on behalf of clients, JP Morgan allocating capital on behalf of clients, whatever the case may be. And then even larger funds like endowments and things of that nature. These are massive, right? Like look at the Princeton endowment, look at the Harvard endowment, look at the UC Berkeley endowment. These are massive, massive amounts of capital. And I think one of the interesting challenges is those institutions have reporting requirements around their returns. And when they have, a brokerage account that can have treasuries in it and a bunch of different ETFs or mutual funds or separately managed accounts or treasuries directly, they can report on returns very easily. The taxes are all managed within that account, so on and so forth. To get Bitcoin exposure, they don't have that ability right now to keep everything under one house. And so if fee structures come down on these spot ETFs, and I don't even know if we know what the fee structure is going to be yet on like the BlackRock fund or the ARK fund or the Wisdom Tree one, whatever the case is. But as those fees come down and it becomes, quote unquote, affordable to be an investor in those funds, I really do see those levels of institutions stepping in, because now all of a sudden they can say, look, maybe there's a client that, is 40 years old, they have children, whatever the case is. Okay, we're going to put 2% of your portfolio into Bitcoin via IBTC. And now, we'll eat the 0.3% expense ratio. I don't know exactly what it's going to be, but now all of a sudden, we're willing to pay that, because now all of a sudden we allow you to increase your Sharpe ratio in your portfolio. And we also get to do all of these accounting and return analysis with this in your overall account with us. And so I think that's where the capital is really going to be coming from, in my opinion.
Excellent. Yeah. So I'm hearing that there's a lot of institutional liquidity still on the sidelines that wants to buy Bitcoin. Am I hearing that correctly? Or they aren't motivated yet. They don't know that they're motivated, right? Their wealth managers haven't really maybe presented this option to them. Are they motivated or are they unmotivated, I guess is the question.
I mean, I don't have any particular insight on that, right?
Okay.
But I would also say it doesn't really matter, because at the end of the day, we're going to have BlackRock and all of their representatives. We're going to have Van Eck and all of their representatives. We're going to have Wisdom Tree and all of their representatives calling these institutional money managers and saying, hey, have you considered increasing the Sharpe ratio of all your client portfolios by getting a 1 to 5% Bitcoin allocation within those portfolios? Mm-hmm. So that level of interest will come, because at the end of the day, these asset managers, these wealth managers, whatever the case is, they are motivated by creating solid long-term returns for their clients. Mm-hmm. And so if all of a sudden the sales teams are calling up all of these asset managers and saying, hey, we can quantifiably prove that you're going to increase the Sharpe of your portfolios with a 1 to 5% Bitcoin allocation, they're going to do it. It might not be immediately, it might not be within 6 months, but give it a year or two, they're all going to come on board.
Yeah, absolutely. So Caleb, I completely agree with you. I think there's always kind of the question of like retail versus institutional. I think the money that's on the sidelines is actually both, right? But the money that's motivated to buy right now is institutional, and they're all going to have their own unique reasons for not buying here Bitcoin here, kind of where we're ranging, 34 down to
Mm-hmm.
33, somewhere in there, 34 down to 33. But what's to come next is that retail buy-in, right? But retail is always really late. You and I, just like finance junkies, people who just can't get enough of the markets, right? For one reason or another. I'm not going anywhere. I love the markets, right? So fascinating. So we're a little bit of a unique retail case, right? But
Yeah.
there's the, your uncle, your mailman, right? There's people that they're going to be buying into Bitcoin next year as it kind of moves up and kind of rattles the media, establishment, and headlines get sprayed up everywhere. Bitcoin this, Bitcoin that, and spreading FOMO, right? That's going to be a whole different movement. It's going to be a whole different vibe. And for those who are just entering, Bitcoin for the first time right now, it's a great time to get in. Obviously, from a price standpoint, but we have to remember that the kind of the frenzy and the buzz that we're feeling right now with Bitcoin moving to the upside, it's nothing compared to what's going to come. And so while we might think that, oh, this is it, retail's getting in, we're going to see a big, huge move to the upside. No, we still have plenty of time before Bitcoin's going to make a real move and come anywhere near putting in a new all-time high. So speaking of all-time high, speaking of retail, which we are retail investors, as far as I know, you're not investing on behalf of a bunch of wealthy, high net worth individuals. I have the question for you, Caleb. Where do you stop buying, right? So I know that you're a big fan of DCA strategy. I assume you probably DCA Bitcoin. But where are you going to stop buying? Because we don't want to buy the top. Where are you thinking you're going to stop buying? Have you even thought that far?
Ideally never, right? I mean, if my thesis on Bitcoin plays out, we're going to several $1 million on the price of Bitcoin. So, you know, um, yeah, it's like I never stopped buying. I
Okay.
was calling up friends and family all year last year in the second half, saying this is an accumulation zone. Buy, buy, buy. I told people on Twitter when we left that accumulation zone at 23,000. I bought in super heavy when we retested that 200-week EMA between 24 to 26K. And I'm just kind of sitting tight right now. I feel very happy with my Bitcoin stack, but I think if you have income, your plan should be to never stop buying Bitcoin.
I like it. I like it.
Yeah.
That's actually a much more bullish answer than I was anticipating. I think that there is an argument for taking profits, right, and just stop. Obviously, that would kind of coincide with a pause at least on buying. And so perhaps that's a conversation for maybe late summer next year, or a time much further out. But I love that answer, and I hope that answer resonates with you listening right now. Hopefully you didn't break anything in excitement as you're hearing us get so bullish here. So, but okay, and then we'll kind of as we're closing out here. Caleb, is there anything in the crypto space or maybe in small or mid cap stock space that you really see a lot of value in, or that you think could see a big move to the upside sometime soon? I know that recently I've seen a big pop in the AI names again on the crypto side, and then
Yeah.
Microsoft earnings was really good, kind of maybe waking that AI narrative up a little bit recently. But is there anything, any like altcoins or any small or mid cap stocks that you're kind of excited about from a value standpoint?
I don't know from a value standpoint, from a speculation standpoint. Yeah, sure. Right. I mean, I kind of did like a post on Twitter. I think it was on like Thursday morning or something. And I said, Bitcoin, invest in it, don't trade it. Altcoins, don't invest in it, trade it. Ethereum, something in the middle, right? So that's kind of how I feel about. Yeah, that's kind of how I feel about a lot of this stuff. Like, I can't tell you something is undervalued in the altcoin space because I have no idea how to value it, and it's just basically a speculation on adoption and development. And like, I'm not a technologist, so I don't know what's going to win that race. But what I do think is if we are really moving into this cycle, where Bitcoin is going to do extremely well, altcoins are also going to rally in sympathy, and many of them have the potential. I don't know which ones, I couldn't tell you, but a handful are going to outperform Bitcoin during that cycle. the thing is, I don't believe any of them will really make new all-time highs relative to Bitcoin. And so that's why I say just invest in Bitcoin, don't trade it. Don't invest in altcoins because they're never going to make new all-time highs relative to Bitcoin, right? I think the only thing that's ever done that is Dogecoin, and it's literally a joke. So if you want to speculate on a joke, go for it. I'm not going to tell you don't do it, but just recognize that nothing else has made new all-time highs relative to Bitcoin. In the equity markets, I think that there are more attractive opportunities. Google got hammered recently on earnings. I think that's kind of coming back into a zone. I was very close to DCAing into that again on Friday. The last time I purchased Google stock was back sub 100, and it got up into the 130. So when it's trading here at 121, I get my ears perk up a little bit.
Mm-hmm. Yeah, I did pick up some on Friday. Couldn't help myself.
There you go.
Couldn't help myself.
I think some of these energy names could be a little bit interesting. Whether that's Chevron or Exxon or Shell, I own all three. Occidental, Halliburton, those are going to be really good dividend paying stocks as well. They're not as sexy and fun, but those are some names worth looking at. And then I think as tech and duration kind of starts to cool off here, some of those names are really going to stick out. So I look at the Data Dogs of the world, the CrowdStrikes, the Palo Alto Networks. Maybe even some of these semiconductor names like Lam Research, ASML, Texas Instruments is one I've been looking at. Qualcomm, something I already own, but I want to get more exposure to. And I think one name that doesn't get enough attention in the semiconductor space is Ambarella, ticker AMBA. I did recently purchase that a couple weeks ago, and I think I'm already down on the position. But again, it's a long-term holding for me, so I'm okay with that. And I think this is kind of the thing, right? Is like I was very bullish between April and July in the equity markets, and I made a lot of money on the short-term side during that period. I was dollar cost averaging in equities during that period. And I think as we kind of cool off now in the equity markets, and like I said, as we come into that 200-week moving average right around 3,900, that's where you want to be a buyer, generally speaking. And so I think for me personally, what I'm going to be looking to do is get more broad-based exposure via some ETFs. So some of them that I like are healthcare. So you can look at XLV, IHI, IHF. And then I really like IGV is the expanded tech, mega cap growth, MGK, IUSG. Man, I could just, there's so many. So I think the market is going to be full of a lot of opportunities over the next 6 to 12 months, as it already has been for the past 6 to 12 months. And so no one knows what the future holds. And I think that's why it's just important to kind of zoom out. My plan this year, regardless of what equity markets were going to do, was to be a net buyer of assets. That's what I've been. That's what I plan on continuing to do. So that would be the message that I would really encourage people who are listening. Be a net buyer of assets.
Yep. Especially if you were below the age of 50 years old. I mean, this is just it's a good time. There's been corrections in an overall up and to the right movement, over the last 15 years. So, you want to buy the dips for sure, especially, if you're on the younger side of the risk tolerance. So, Caleb, thank you so much for all these insights. Man, somebody out there has been waiting for the Caleb Franzen download, and they just got it. You dropped so many tickers, so many names there. You could easily fill up 3 hours doing research and you should do your own research before buying anything. None of this is financial advice, but Caleb, I want you to let folks know where they can find you online. Obviously, we've talked about your X account, formerly Twitter, quite a bit. So tell us where we can find you there and on Substack.
Yeah, check me out on Twitter or X now. At Caleb Franzen is just my first and last name. And then I do have a free research newsletter, cubicanalytics.substack.com. So whether you're interested in macro, the stock market, or Bitcoin, there's going to be something for you in those reports that's going to be applicable. So that's really where I'm at: Twitter and Substack, Cubic Analytics.
Absolutely. And I see you on Twitter all the time. I don't know many other accounts that are anywhere near as active as you are. So guys, if you're not following Caleb on X, you genuinely are missing out. I see and like and find value from at least one X, at least one, I'm going to call it a tweet, at least one tweet a day from Caleb. And I genuinely mean that. I mean, he puts so much work into it, and it seems like it's just water flowing from a river for him. It's not like he's grinding to try to make these, these charts and these different insights work, it's clear that it's a flow for him. It's really a passion. So it's always a pleasure to have you on, Caleb, and I look forward to the next time. Thank you so much.
Appreciate you, bro. Good to see you.